Thank you for joining us on the Everything Money channel. As always, I'm your amazing host, just sexy, kind of just
amazingly humble host.
Handsome.
Oh, by the way, did you see the comments somebody made about me the other day?
What?
On YouTube, they said, the ego on the big head ego on this guy, like I've never seen such a narcissist. I just wrote, hi.
I saw that. Yeah, they love you. Boy, welcome to the show. Welcome to Everything Money. Today we're talking about Barrick Gold. This is a mining company. Paul, you like gold. People are flocking to gold. And this is a very interesting company. Mo lit up. There's a lot of traffic on Trader Mo's morning shows at 9 a.m. talking about Barrick Gold. This is a mining company based out of Toronto with 16 operating sites in 13 countries. It's been around since 1983. And today, we're going to look at the financial health. Where is gold going? Where is gold trending? We want to take our 8-pillar analysis to look at the financial health of Barrick Gold and see what's going on. Paul, their stock price of late is down after some massive growth.
Yeah,
but regardless, look at that. So we're going to look at Barrick Gold today and analyze the health of the company. Paul, what do you love and not love about the gold and the mining process? I love it. I know, like we talked about before, you often wear gold teeth on your incisors, and so what are your thoughts on gold?
So gold is like everything else. It goes through cycles. If you're a believer that the money being printed today is going to be inflationary, the argument back would be that gold would be the place to put your money. Now, the great thing about gold miners is when gold is depressed, the miners get like, I think at one point, like gold miners were down like 95% when gold was down to like $800-900 an ounce or something like that. But what you got to look at for the miners is you have to sit there and say, how much does it cost them to actually mine the gold, and where does gold need to be for them to be break even? And I think for a lot of these miners, it's somewhere in the $700-800 an ounce range, and we're currently at $17-15 per ounce right now, and we hit as high as 2,000.
Wow.
I do think that with the inflationary pressures, I have long-term bets on gold. But how did I do it? I don't buy gold directly. I'm buying GDX and GDXJ. These are two ETFs that buy gold miners, because I'm getting pretty lazy about the gold thing. Just saying, listen, they've been beat up a lot. I want to buy gold miners and see which ones just grow with as gold prices go up. I do think gold will go up substantially over the next 5 or 10 years. Could I be wrong? Sure. But at the end of the day, I like looking at these gold companies. And for those of you who want to do more detailed research on gold, on miners, the big key is go find out how much it costs them. Find the low cost people who mine it very well, and go buy those companies, because those guys will do well as gold prices go higher.
Before we get to 8-pillar analysis, let's head over to Trader Mo, Dr. Bid and Ask. Mo, what are you hearing about Barrick Gold specifically and the gold trends in your day trading?
So gold is definitely beaten down. It's been since midsummer, I guess. That's when we were seeing the highs. And it's just been beaten down. And a lot of what I have a very heavy investment in gold right now. And I'm doing the same thing as Paul, GDXJ. So he's going to tell you about how to analyze these and whatnot from a value perspective, which is what we're playing. But in a second, we're going to come over here and we're going to look at how you can trade this on a chart. And I do think over a long period of time, you will benefit greatly from owning gold.
Are you talking tens of thousands, Mo, or hundreds of thousands of your dollars in gold or your portfolio? I mean, what are we talking here?
It's hundreds of thousands.
Wow, that's a lot in gold. Okay, Paul, let's talk about the 8 pillars for this company. Let's get into it. This is quoting Mo. This is the sweet spot of why people join us with the 8 pillars.
And this is our website. This is our Everything Money app. If you join our Patreon, stay to the end to figure out how you get this website for free, which costs on other sites $50 or $100 a month or more.
What is the market cap for Barrick Gold?
$35 billion. Now, they have a PE of only 11.5, so it's a check mark there.
Nice.
And great profit margin, 24.81%. Yeah, and a gross profit margin of 38. So they don't have much in terms of operating costs to get to that number. Now, they pay a small dividend, 1.38%. Now, one of the benefits of having our website versus other ones, we're going to tell you exactly the dividend amount and the free cash flow, because most people out there in this world think that dividend is safe. It's not necessarily safe, people. Companies will use it as a way to get you attracted to them by increasing their dividend by taking on debt. We look at free cash flow. Can it support the dividend? In the last 12 months, they had $2.7 billion in free cash flow and paid $480 million in dividends. That's almost a 6-to-1 ratio. That's pretty solid. Only 16% of their free cash flow in the last year went to dividends. So I like it a lot.
Pillar number 3 is revenue growth over the past 5 years, Paul.
8.5 billion to 12.2, check mark there. And you're basically going to see the revenue go in tandem with gold prices. That is why that's why instead of betting on gold, you can bet on the refineries and the better ones that manufacture it, refine it at a better, mine it at a better rate and all that stuff.
That was very clear how you said
Yeah,
it.
I know.
Did you know that pillar number 4 is profit growth, Paul?
Oh, profit growth.
Yep.
So they lost big money 4 or 5 years ago, 2.39 billion, and made 3 billion, check mark. I want to keep note here. This is why I like to buy the ETF. Look at their previous 5 years. Lost 3 billion, lost 3 billion, lost 11 billion, made 3.4. It's all over the board there. Now, we want to go look at their cash flow to understand fully what the losses were or the gains were, but it's just all over the board there.
Pillar number 5 is shares outstanding. We want this number going diggity down, Paul.
Now, like all software, we have bugs here. This is not the actual shares outstanding, but the ratios are accurate. 4.66 billion to 7.11x. They've greatly increased the number of shares outstanding. I do not like that.
Well, this is no good. This is our first
That's a big difference too.
Why do you think they're doing that?
I don't know. That's what part of the, people come in here and say, you didn't do your due diligence. Guys, our goal, every good value investor has a weeding out process. This is my weeding out process. This is the process I use to determine what my next questions are. I'm not trying to get in the nitty gritty. For those of you out there who are upset by that, you're probably only upset because I'm not telling you what you want to hear. At the end of the day, I do a weeding out screener, and this is how I screen my companies to then go decide which ones am I going to go ask more questions about, and which ones am I going to ignore. So far, there's only been one bad thing in this company, and that's the shares outstanding, but it's pretty sizable increase, like a 70% increase. That's a lot.
Pillar number 6 is current assets over current liabilities, Paul.
So current assets, cash on hand, about 7.9 billion. Current liabilities, 1.75. So phenomenal there. They have plenty of cash on hand to pay their current debts.
Nice. Shall we get to the free cash flow?
Nothing would make me happier.
This is so important to you.
I love free cash flow, guys. I love it more than earnings because free cash flow is harder to manipulate. With earnings, there's so many SEC rules and accounting rules that can fluctuate the number. Free cash is much harder to do that with. The great news about our website is we give you the number right here. Cash from operations less capital expenditures, but we added a line right here to our investing section that just gives you the number. This is not part of any other financial statement, or we are adding it there ourselves. They did 1.4 billion in free cash 5 years ago, 2.7 this year. Check mark there. That's an almost doubling of the free cash flow.
What are the middle numbers?
0.74, 0.568, 0.814.
Wow, 0.8814. So the average free cash flow over the past 5 years is 1.25, Paul. 1.25 bill?
So 1.25 billion. Now, I will say this. I'm okay paying 20 times this amount, and here's why. I do think gold is going to go much higher in the next few years. So my assumptions are gold is going higher. I have to assume their free cash flow is going to go higher. We're going to get a lot more growth. You might even be able to justify a higher ratio in this. Remember, this factor is the art of investing. You need to decide what you're willing to pay a premium on to get this free cash flow. Now, keep in mind, what was the market cap of the company?
The current market cap is 35 bill.
Okay, 20 times 1.25 is 25 billion.
That's correct.
So you sit there and say, it's an X, which is an X.
This is pillar number 8, our price to free cash flow.
However, I'm gonna deviate here. The last year was 2.7 billion of that. That means right now it's selling for about 14 times free cash flow. 35 billion. Seth, what's 35 billion divided by 2.7?
13?
13 times free cash flow. And if you think this is gonna get better and better and better, I think the company right now is a buy. If you think this is getting better, now, I will say this. Before you go out there buying it and before you just fell over your chair going to put your order in, the number of shares outstanding is very, very bad. So even though their free cash flow number is going up, if their number of shares outstanding keeps increasing like this is gonna dilute the heck out of you and you're not gonna like this. So you have to be very, very confident that shares outstanding are not gonna continue increasing and hopefully go lower. And then from that standpoint, I do think from gold prices going up, they will make a lot more money. Or you can do what I do, go to GDXJ. If you like gold, if you like the miners, go buy those ETFs. That you don't have to worry about this. You can just buy the whole portfolio of all these guys, the big ones and the small ones. But from everything except for the shares outstanding, I love this company. Even though there were no negatives to it. Besides
besides shares, we're all checks. So
We're all checks on that one.
Check out the 8 pillar right there, Paul. Is it clean?
Oh, so look at that. We have a little bug right here, but this is a check mark. This is actually a check mark. Let me make that green.
So what I would say, folks, is this is
Oh, no, sorry. This is an X. This is an X.
This is our Everything Money software. We're still beta testing it. This will come out April 15th to all of our patrons. And so we're just finding the patrons, Paul, they're loving this.
And the price of free cash flow was also an X, if you remember.
Oh, okay. Yeah, you're right. Because you're right. It was an X.
You guys, you go to our website and it just gives you the numbers right here back with the data from the first page.
Yep, the patrons are loving this, Paul.
Oh yeah, they literally I get emails every single day from people going, Paul, this is awesome. It's changed my life. I'm like, all right, cool. So the question you have to ask yourself is, right this very second, it's $15 a month. Is this worth $15 a month to you? That's the question you have to ask yourself.
We'll get to that, Paul. Let's go over to Trader Mo and talk about what's moving with gold, Barrick Gold. Trader Mo, what do you have over there? Dr. Baden asked.
So it's funny. It just dawned on me just 30 seconds ago that I actually do have a tracker share on this right now. And I don't know if I'm going to do anything with it, but I do want to follow this company. So their highs, and I just wrote in $30 here because this is really crunched up. But we were at $30 in August. So right now, after trending down for a very long time and just going underneath the 32% line and just going sideways. So it's undersold, consistently just going sideways. Your price is still trickling down on you. Now, to me, I look at that as a really nice play for me because back here I threw in a tracker share at say $25 and just waited. And I'm waiting for, what am I waiting for? I'm waiting for this red line to turn up like it is kind of right now, break through our 32% area into this sweet spot area where I can go ahead and buy. So the point of a tracker share is I could spend $20. Worst case scenario, this company goes away and disappears and you lose $20. Best case scenario, you catch this for $20, ride it for a long time, you're looking in your portfolio every single day and you're seeing GOLD right there. And right when this thing moves up on you into that sweet spot area, boom, you could throw on however many shares you want to, and you have a great buy on your hand.
Final take on Barrick Gold, Paul.
I love it except for the shares outstanding. I think it's if you can get a grasp on that one and see what they're going to do, that really actually ruins the investment for me because they just almost doubled the number of shares. So all that growth went back to half, because you got to remember what shares outstanding does. It dilutes you as an owner. It increases the number of shares, but you still keep your same shares. So now it splits all the revenue and profit and cash flow amongst more people, even though you own the same number of shares. That sucks for you. So, yeah, pretty much it.
If that speaks to you, you can join our Patreon group. The link is in the description below. As we say in every video, the Patreon's been going phenomenally well. You get your own group. If you feel, as I say, some of our patrons really relate to the ideas. I felt very alone before I met Paul, and I have these two in my life now. I'm very lucky, but they can be in your life as well for a small monthly fee, and you get access to all this financial data. So if you're looking to level up, maybe you are paying a financial advisor and you have no clue what he's doing with your money, or maybe you're listening to hype YouTubers about where to invest your money in these hype stocks. And if you found us and you're drawn to the math, the facts of these companies, you can join our Patreon and start kicking ass. Paul, talk about the levels that's going up and what we offer.
I think this is going to go into the video coming up, but these are the levels. This is our software right now at $15 a month. These are all the things you get. 8 pillars, retirement account, stock screeners, momentum trading, Discord. Our competition, $200 a month, $200 a month, $35 a month, and you don't get any of that stuff. It's pretty standard, straightforward. If you don't get this, then 2 + 2 = 8 to you. I have no idea.
That's our take on Barrick Gold. Exciting, interesting company, and the ETFs are equally as interesting. So if you're drawn to day trading, join Trader Mo's middle tier in the Patreon. And yeah, that's Barrick Gold. We appreciate your support. Tickle that thumbs up on the way out. Just tickle Paul's little butt cheeks there, and he'll certainly enjoy that. Thanks, guys. Thanks for joining us. As always, Everything Money. Love you.